Hey Margie, please accept my apology. I started to send this yesterday. It was kind of later in the day, and there's just so much to say. There's so many different things. So I'm just going to kind of give you an overview, and then I'm going to send you a shorter email. So, okay. So there are loan limits in the areas that you're looking to purchase in, Riverside and San Bernardino County. And the conventional conforming Fannie Mae, Freddie Mac loan limit, which is the traditional loans that are in the low fours when you put 10 or 20% down, those loan amounts or loan limits cannot exceed $424,000. So that would be like a $435,000, $445,000 sales price. And that's a straight regular loan. Conventional loans have two features, one with mortgage insurance and one without. Let's say if you have you put 10% down, there's mortgage insurance factor. Let's say it's $100,000. Your monthly mortgage insurance would probably be like $50, maybe $70, $50 to $70. And let's just say the interest rate was 4.25. If you did something called lender paid MI, lender paid mortgage insurance, what that means is they put the mortgage insurance in the interest rate. So the interest rate is not going to be 4.25, it's going to be 4.5. Now you're like, well, 4.2 to 4.5, why do I want a higher rate? When it's prudent to look at this loan, it's when the savings are truly that much more or that much greater. So in higher loan amounts, we often find that it's a lot better to go out of the gate in a lender paid mortgage insurance loan just because the payment is so much better. If you're at like $200,000 or something, maybe it's not that much better, but it almost is always that much better. So we put a lot of people into these LPMI loans, and typically we do them at the 5% down and 3% down range usually. Okay, but you're looking at $450 to $550. So if those sales prices, now you're in something called jumbo. And jumbo loans want 15 to 20% down, mandatory across the board. And jumbo loans are underwritten by Fannie Mae and Freddie Mac. And they have all these guidelines. The debt ratios are tighter. Jumbo loans are just a lot more restrictive in qualifying. You have to have certain credit scores. With Fannie Mae and Freddie Mac, they're just general across the board rules. But some lenders apply different overlays. And so it just kind of depends on what lender you go through, how well versed your loan officer is at evaluating your situation and placing you with the lender that you fit best with. There are solutions to this 15 or 20% down jumbo dilemma by doing a combination loan or seeking out lenders that are doing what's called alternative or portfolio financing, where these loans are not backed by Fannie Mae or Freddie Mac. So they're underwritten and approved and guidelines set by the investors that are going to purchase and bundle and resell this loan product. This is something we're seeing more and more of. Let's call it an 80-10-10 product. So you've got an 80% first mortgage, and that would be probably somewhere. We have one right now that we're pricing out and that we're doing for a client, and they have a 740 FICO score, and the rate is 4.375 with 10% down. And they're not paying any points. It's just a regular, vanilla first mortgage. Then they're doing a 10% second mortgage, and the rate on that is in the sevens. But it's amortized over 30 years. So a lot of lenders are doing a 15 due in 20, and the rate is like 6 or 7, but it's amortized over 15 or amortized over 20 years. So it makes the payment a lot higher. This second, even though the rate's higher, it's stretched out over a longer period. So you're yielding a lower overall yielding a lower overall payment than if you were to go into a product, like a jumbo product. Jumbo pricing is not that pretty. I'm talking not that pretty 15, 20% down, 4.8 to 5.3. So this combo product, I have a couple little office dogs, so you hear that. This jumbo product rate is high, so this combo product, when you do the numbers, the combo product has a much better payment. So don't be scared of that higher rate on the second. A brand new product that they have out is pretty amazing. You can put as little as 5% down, and it's a 40-year loan. So it's amortized over 40 years. Interest only for the first 10. So this is going to yield you the lowest overall payment of any payment and allow you to get in with the least amount of money. So it's a super, super cool product. The rate's high though, so I tell you the rate, you're going to be like, oh my God. But interest only the first 10 years and a 40-year time frame. So the payment is going to be the lowest possible payment that you can get in the jumbo realm or the jumbo loan amount. And it's going to also be the lowest payment and the lowest down. Remember though, these loans are underwritten to specific guidelines and they don't go to standard Fannie Mae and Freddie Mac. So we have to, all of our knowledge that we know, whenever we originate one of these loans, we just have to go back and just make sure that that you meet these investor guidelines. And a lot of times with the lenders that I'm using, I'm able to do what's called a 43 debt ratio. A lot of jumbo lenders are restricting you to a 38, to a 40. If you have a second mortgage involved, you're going to be at a 43 debt ratio in most cases. So, so this 95, 40-year interest-only product, you're probably looking at a rate in the high fives. But again, don't let that scare you because it's amortized over such a long period of time. So I think with you, every case is just highly customized and evaluated in several different ways, and the options are presented to you so that you have the information in front of you and that you know everything about that loan and that you're making the decision that's best for you and your family. And you have me, you have my guidance. My job is to advise you, present you the options, and then tell you what I think you should do because I am the professional. I'm the consultant. I have the knowledge. I do this all the time. I have a real estate broker's license along with a mortgage broker's license. So let me take care of you and your family. Okay. So see, that would have been a huge email. All right. So you guys give me a call at 909-920-3500 when you're ready to talk about this. Have a wonderful evening.